Hey, greetings, Dr. Jeffrey Scott here. This is my Market MRI Pro update for Monday, October 6th, 2025. Well, we got through a Monday okay, but what's next? Now, if you watch my videos over the weekend, you'll understand my comment. My portfolio is melting up. Will the markets melt up next? I think we probably are melting up in the markets. It's just at a slower pace, very different than 99 to 2000 when the NASDAQ doubled between October and Marchish. But the markets are hot. Um, but what happened in March of 2000 is the markets fell hard. And are we heading towards that? You saw what happened with APP with the announcement of a potential federal investigation on what they do with data. Didn't say they were guilty. It didn't say they're charged. And it sold off 100 points. A lot of the big runners are starting to sell off. So we got to be at a point where this market is risky, but it's still going higher. And I think it's melting up. I mean, I'm watching in the background Kramer, REN broke, IREN has just broke $61 after hours. Um, it's a little bit out of control, frankly. Stocks with no earnings. The story about data centers, AMD does a weird deal with um, OpenAI. It goes crazy and it brings the data centers up with it. Well, data centers are a big deal right now. I guess that's the message. And all the companies that support them, we did probably about 6 weeks ago, we did a video and I broke out the electrical components, the energy producers, the nuclear companies, the infrastructure builders, all the pieces that go. Yep, I'm looking at OKLO, a nuclear related entity up 1238 now. Wow, what a day. It seems like a melt up to me. Again, Jeffrey Scott, marketmripro at gmail.com, Google Group Top Down Trader, and www.marketmripro.com. And yes, I rant and rave a lot of what I think is going on in the market. And welcome to my show. This is for educational purposes only. Anything I talk about should be taken as education, not investment advice. I have my own tools for top down analysis, and I like showing people how I use them. Trading involves risk. You and your owner are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock mentioned in this report. Trading stocks and options should be considered risky. You should consult with your financial advisor before making trades. I've got tools in multiple platforms. Hey, I apologize about Sunday's video when I worked up Shopify. And if you haven't seen it yet and you are interested in identifying lower risk options with big upside, I suggest you take a look. Shopify was the stock that I picked. I showed you the different option trades and I did get filled today. Hopefully some people took it with me. For some reason, it got stuck in processing hell with YouTube and never got uploaded. So I redid it this morning and thanks to the gentleman that pointed that out to me. My Google group's called Top Down Trader. Why should you join? Well, you get extra $100 off any of my tools. More importantly, it's how I communicate. When I do webinars like I did this weekend, that's sometimes the best place to find out about them. There's a little bit of dialogue. If anybody does spam, they get put to moderated, and then if they spam us again, I only see it. Nobody else sees it. I kick them out. Had a spam happen today about air vent cleaning. Like we care less about that. Um, I'm sure it's important, but it's not for a top-down trader. So go to Google Groups, go to all groups, and find my group, Top Down Trader. Let me know how you want to be contacted. Hey, thanks for all the interest that came out of this weekend's live presentation for the Palm Beach Gardens meeting. It's the same price live and online. If you want it online, I'm going to uh, you're still going to get the rebate towards my tools. And if you don't have my tools yet, you can use that 400 and sign up for Top Down Traders. Another 100 will give you $500 off either my TradeStation app or the Market MRI Pro tool. And if you buy the Market MRI Pro, you get the TradeStation indicator set for at no cost because of how we've integrated TradingView and Market MRI Pro. Um, it's at the Marriott Palm Beach Gardens in Florida. You fly into PBI. We're 15 minutes north of it by Uber. I'll feed you breakfast, lunch, and dinner on Sunday rather, on Monday, breakfast and lunch. We have a dinner cruise on the yacht on Sunday evening. Hope to see get the room up to 12 or 15 max. And like I said, pretty pleased with the response. So we're actually getting close to filling up the room. I will work my butt off and make sure you leave very satisfied. If you want even more, John Person has his meeting the 2 days before. His meeting is Friday and Saturday. Mine is Sunday and Monday. And we both approach the market similar. I use a lot of his tools, but you get two different flavors. And boy, is he smart. Super duper guy. One of my best friends down here has owned a futures brokerage, has authored books, has created awesome indicators, and will be launching the first outside educator app add-on for Market MRI Pro as well. So if you have any questions or interest, reach out to me, Jeffrey Scott at marketmripro@gmail.com. And yes, John's is a separate fee, but it's only one airfare. Fly in, go to two meetings, fly home. Um, as I mentioned over the weekend, with the shutdown, we're not going to get a lot of the news that we'd expect to get, since everybody assumes, right or wrong, that the Fed's going to cut. Maybe that's a good thing that we don't get any data. So um, it can only change their mind. We do get a trade deficit supposedly tomorrow, but we won't get it because of the Fed. Maybe we'll see the credit. The yellow ones I don't think we'll get. You still got a bunch of Fed heads speaking as well. Earnings season will start. Somebody said after hours, after the market tomorrow, it looks like Thursday morning to me is Delta. But when I see Delta sitting there, it tells me earnings season is beginning. It's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. And for more information about anything I talk about anything I do, um, feel free, marketmripro@gmail.com. I'll respond as soon as I get it. And if you have any issues technically with the program, no, it's not a virus, but some antivirals look at the installation file and say, Praveen can get on you with your computer, get everything installed, and consider joining the top-down trader Google group. Let's go take a look at some charts. So, interesting day in the market. If I just looked at my portfolio, I would have thought the market was on fire. But then I looked at my contra ETFs and I saw that, for example, the diamond short the DIAs, which is what I did instead of buying the dog, was actually up today. And I was like, whoa. And then I looked at the tools and I realized that less than half the stocks are up. So what looked like a strong day, and there's some big movers, the quantum computers, the data center business, AI still had a good day except for NVIDIA, sold off about 1% on the AMD news. But if we look at the daily performance, Bitcoin was up another 2%, now up just shy of 10% in the last 5 days, well over 10% if you go back 6 days. If you look at the Qs up 0.75, finishing in the middle of the range, dollars 0.47 up, and the lower half of the range, Russell 0.39 up, lower half of the range, Spiders up 0.36 in the upper half of their range. Diamonds lost 14 cents, but that was well off the bottom. And then VIX was actually lower. When I looked at the new high, new lows, I was impressed that they're actually higher. Now, the number of actual new lows increased quite a bit, but new highs did as well. New highs minus new lows are still very positive. If we look at the participation, you can see the number of sectors and industry groups that were up, reduced across the board. And in the S&P 1500, only 44% of the stocks were up. In the NASDAQ, it was 53%, and the S&P 1500, it was 45, 46. So the NASDAQ outperformed, but if you look at the major indices, it wasn't even a 50-50 day for participation. If we look at the one-day change in the S&P 500 sectors, technology, utilities, and discretionary. And I think the story of the utilities is very much electrical generation for data centers. The laggards, real estate, um, staples, healthcare, some of the things that are they're defensive. Now, healthcare has been on fire. It pulled back some today, probably some profit taking. And if we look at what themes were leading, the ones above 2% included cannabis, uranium still, blockchain, and then above 1.5% were semis, gold miners, silver miners, renewable energy, robots, robots, artificial intelligence, transports, aerospace, and then it starts to fall back. But there were a lot of groups up, a lot of growth groups were up. Okay. If I look at my timing brief on the daily model, you just look at this line, green is buy. We're in a buy across the board, and you can see we've been in a buy for quite some time. And if we look at weekly, sometimes it takes a little bit to pick it up because there's a lot of bars. I'm not going to wait for it to come up, but I'll suffice it to say that on the weekly, you'll find that we are also in a buy. So spiders, Qs, diamonds, Russell. My timing model says to be long in the short term, intermediate, and longer term. That doesn't mean all in and all your cash. It just tells me the major market trend is still going higher. I will look at other tools as we go through the next few minutes to gauge whether I'm all in or not all in. Here's the weekly, and you can see how many weeks, especially on the spider, that we've been, I want to do this, let's say 150. How many weeks we've been up off this bottom, just phenomenal. And you could see we came in pretty quick with our buy signal. If we look at the US index ETFs, let's take a look at what they did today. Um, not a bad day. And you could see if you look here at the spiders that you've got a doji up 0.36%. Seasonality is fine. You got the 17 and the 50 underneath. Um, I've been expecting a pullback to the 17 and a bounce like we saw here, like we saw here, here, and here. Here we pierced it. We came back the next day. And if we get a significant pullback, maybe we come back to the 50. But that's about as bad as I expect. I don't see us having a big sell-off until next year when maybe the big R word comes in. And recessions and bear markets are ugly. Just say that now. Qs look very similar. I'm not sure if it qualifies as a doji. The body's a little bit too thick, but this is at least a pause or um, a candle that suggests the markets are trying to decide what to do in decision day. Again, seasonality is fine, and we've set an all-time closing high here and an all-time intraday high. So new highs continue to abound. The diamonds will look a little different. The diamonds on the daily did not set a new high, and actually they traded much lower in the morning. And I was so tempted to add to my contra ETFs or to my short the index ETFs positions. And once again, like the others, would a pullback to the 17 be that much of a problem? So you'd be looking at 467 down to only a 1% move there and down to here 453 from 14, 3 to 4% move. So I think we've got great support underneath. You can see we hit the 50 there, most times to 17, but it's hard to be short a market that's going higher. To be very clear, my short position in the index ETFs is purely insurance. If you watch my videos, you would see how much my portfolio has gone up since the April 7th bottom, since January. And there are a few positions that I want to let ride. So I bought contra ETFs or shorted the ETFs because I wanted to push in the first 5 to 10% down, which will usually happen before I have a chance to just dump my portfolio and go to cash. So I've got some protection on, and I've done this is the third time this year, and I'm 0 for 2, which means each time I thought the market was going to go down further, um, it didn't. So I'd rather buy the protection and sleep easy at night. I got too much money tied up in my portfolio. And then if we look at, but not enough that I can't sleep at night. And part of it is just the gamification that I got so um, intent in driving a good performance this year in a model portfolio. I don't want to ruin the performance I've had. The Russell looks very similar. It closed at a um, all-time closing high. It actually came down off the highs. Still looks like indecision with bottoming and topping tails. And again, I think the beauty of this rally is we're not that far off the 17 and the 50 days. So any type of a correction would not be the end of the cycle. If we look at the VIX, it's continuing this little like rounded bottom, although it was down in the markets 1.68 looking at the VIX futures. And if we look at the dollar, it popped over this line. But if you watched over the weekend, you know that that line is a low consolidation and a much bigger move. So I was curious whether or not we'll get above the 200. I kind of doubt it. But I'm going back to Europe. I was there about a month ago, and boy, are things expensive when the U.S. dollar is weak. So maybe it's coming up so my wife can buy more things when we're there. Just kidding. I'm the one that spends the money, not her. Commodity ETFs, you could see gold and silver both gapped up, both finished higher on the market. 1.89 on gold. It looks like 1. Oh, let's go back to year to date. Actually, I like the 150. You can see silver also popped, was up 1.24. Oil is struggling and consolidating around the 200. Natural gas is pulling back into the 50. I guess if I had something to be concerned about is the 10-year was up 1.09 and the 30-year was also up today. Looks like, see if I can clear a space where I need to look. It's not going to do it. Hold on a second. I've got to get a less sensitive mouse if it kills me. Let's just look at 50 bars. Oh my gosh, if I don't look at it. All right, come on. There we go. So 0.96 up on the 30-year. Now you got the 50 crossing down through the 200. I like to see that a reverse golden cross. You want rates to come down. But rates were up today, and I think there's a lot of discussions with Fannie Mae about how do you stimulate home builders. But unless you can cut the rates, I don't think the problem is home builders. I don't think the problem is people not wanting to sell their house. I think the problem is, and I had to explain it to my wife today, I don't have a mortgage, but if I had a 2.5% mortgage on this house and I found a new house and I just wanted to roll in and get a couple $1 million mortgage, I between 2.5% and 6.5 or 7 on a jumbo, it would cost me a lot of money. So why would I sell my house? I love my house, especially in that scenario. I think that's a big part of the real estate problem. If we look at the buckets, you'll get a very interesting picture in that the NYSE, and none of these numbers are extreme, the S&P 1500 and the Russell 2000 had an increasing number of stocks below their Bollinger Bands. That is getting oversold, but none of them to a point where it's meaningful. Yet look at the NASDAQ, which had a buildup over yesterday's gray bar and the underneath, but a pretty powerful high day above. So the NASDAQ has some element that is at the upper part of the Bollinger Bands at the same time while they're increasing those at the lower. So I thought maybe we get a Hindenburg because it looks like people are buying and selling and there's a lot of entropy in the market, but nope, no such luck. We look at market breadth. You could see that NYSE probably set a nominal new high today. The high here was 21, 820.29. Here is 21, 813. So nominal new high and a new closing high today. NASDAQ as well. So markets across the board at all-time highs. Interestingly, the AD line on the NYSE was negative. The new high, new lows, up, down volumes were positive on both. And the AD line on the NASDAQ was positive. But things like having a negative AD line at all-time highs starts to build the story that maybe not everything is right. And if you look at the this market breadth, we could see we dropped to 72 on the Spider, 73 over here on the NASDAQ Composite, 66 on the S&P 1500, and 67 at the Russell. So consistent with a bad day in the market, what we see here is that the 13-week new high, new low has come down, and there's nothing to suggest that we have any major risk of a sharp sell-off based upon being overextended in the next couple of days. What's still bothersome is when you see new highs on the NASDAQ and look at where we're sitting here on the AD line. Look at the RSI, can't even get back to where it was here. Same thing on the Russell 2000 here and here versus here. You could probably make the same argument on the S&P 1500, at least on the um, AD line. Now the RSIs look like they're rolling over on the spider and the S&P 1500, and that's the kind of thing that might make us concerned that maybe this market is getting close to a top. So I will now summarize my feelings on the market. I respect my buy sell signals. They get me out a little late, get me in a little late, but they help me avoid much of the downside craziness that occurs in a bad market. However, I'm not a lemming. I can look at other things. And when I look at these divergences that have me concerned, with the sell-off that we saw around 12 o'clock on Friday, I shorted diamonds, I shorted triple Qs, and I shorted TNA, all ETFs of the major indices. I thought I'd cover at the open today with the indexes what they look like. As I looked around, I said, nah. And when I take all three of them together, I'm still up since I bought them, which is also bothersome. I don't want to make money on those. I want the market to go crazy to the upside because I'm still predominantly long. But when I look at the breadth of only 45% of the stocks of the sectors up in the S&P 1500, 36% of the industry groups, 46% of the stock, it has me a little bit nervous. And therefore, I have cash. And I took some profits today. I sold off part of my LABU position. Sold off part of my, this shows you that I don't know everything, my IREN position because I've been in it since 30. And I got to put some money back into my account. Plus, their calls. They're going to expire in 2 weeks and I can buy new calls. And it's not going to impact my taxes because they're going to be short-term gains no matter what I do. If I look at some of the industry group and sectors, I go in the ratio charts. Well, the first thing, each of these, except for the Bitcoin, are the S&P sectors versus the spider. I'm looking for this. This is strength. Bitcoin is on fire. So you can see communications has weakened of late. Staples is horribly weak. Technology remains the overall strength. Healthcare, even though it sold off a little bit today, is also strong. And Bitcoin related stocks. Next, I go into my JAS layout. Mind you, we're at 22 minutes now. I said on my video I can get this done in 30. I talk a lot. The first 6 minutes was just me babbling about my thoughts on the market before we went into the program. If I take those out, we're at 17 minutes. I still have 13 minutes to analyze the markets. I've got 3,872 stocks in my impulse list today. That impulse list is going to be made up of stocks in the S&P 5, in the NASDAQ composite, and the NYSE composite and the Amex, and then they're filtered for $1 and 100,000 shares. So unlike the S&P 500, whose sectors are based upon the 500 largest stocks, I am basing my analysis on a much, much, much larger number of stocks, a much more broader swath of the market. If we go into top down and I look at where the strength was by percent today, I see it's technology, energy, and utilities. That's interesting. If I look at the 2-day, industrials have moved up quite a bit. All right, well, let's just stick with the top three. And we could see there's 919 stocks there. These are the 10 industry groups in the top three. Let's take them. 1, 2, 3, 4, 5, 6, 7, 8, 9, and 10. I got 413 stocks in the top 10 industry groups in the top three sectors. Now let's put in a filter for $5 and 500,000 shares. I now have 255. So what I typically do next is I want to look at the top 5 of them 3 or 4 different ways. Let's look at short-term momentum. AMD obviously is going to be everywhere. So it closed well off the high. If we look at it here, if you look at upper left-hand corner, on this bar, it closed at 203.71, which is just above the low of the day. It got up to 226, opened at 226. I would ignore the fact that it fell back. That's not a surprise. That's just what do you do from here? I'm not sure I love this deal. I'm not sure I would be chasing AMD. I'll use the excuse that it's pretty extended right here, and it wouldn't surprise me to see it drift down before it goes higher. It's exciting. It's great if you own the stock going into today. If you bought it at the open, you're probably unhappy about it. Massive volume. I think I got to let this thing settle out. SANM, this is a, like CLS is a um, outsourced manufacturer of electronics. Again, after a 22% move, finishing in the lower part of their day, up 22%, extended stock. Would have been great to have bought it last week. I'm not sure I would buy it right here. Monolith Power, we've looked at this a couple of times. Here was a nice breakout that we talked about. I draw the lines when I see something of interest. That's a John Person buy there as well. And you can notice the constellation of the blue dots, the squeeze, the breakout above the moving average on the relative strength versus the spider, and the OBV showed some life there. Like the others, this thing's starting to get extended. And that is, I think, the theme. When you look at something like OKLO, massive run up again tonight, you're going to get these ferocious sell-offs because of how extended it is. Why isn't the high jump working? Because it doesn't have enough data. IREN, one of these days I'm going to wake up, this is going to be down 20 points. Hopefully I'll be out of it. How do you buy it up here? This is why I took some profits. The stock has gone in April. April, it was an $8 stock, $6 stock, and now it's a after hours a $60 stock. You got to take profits and expect a pullback. Um, you want to avoid being in this. Now, of course, if you've been in this any length of time, this was no big deal. But if you bought it any time since this gap up, you're either underwater or barely profitable. So these big sell-offs are occurring more and more. Black is a very expensive semi. I don't even really look at it. And I can afford big stocks, but how much of this am I going to buy? ALAB. Now, ALAB, I made a nice return. I got out in this area here when my options expired. I should have got back in, and then it popped and dropped, but it's running again. ALAB looks interesting. ASML, I own some of this in my long-term account. I don't know how I could buy it up here. Now, Taiwan Semiconductor, this was the time to buy. Right here, this is why I look every night at charts because you only get one shot sometimes. That was a great time to buy. This was a great time to buy. This wasn't a bad time to buy, but I can't buy it up here. It's extended. AIP, Arteris. Again, I want to know what happened, so I might look over here at the news. Selected by Nano Explorer for space applications. All right. Like, I understand space, but I know that some of these space stocks are moving. AAOI, a small, inexpensive semiconductor stock. It was a lot less expensive down here. Nice uptrend, pull back to the 50 and a breakout on really big volume. Breakout momentum. This is what I like in the RS. RS turned up. OBV's turning up. I might look up here. Do they have earnings today? Earnings are not till November. It's going to be a loss of 10 cents versus a loss of 21. So that's cutting it in half. 6.52 of sales, probably million, going to 11.98. So that's improving. I thought they'd have more sales than that, but so I'm always looking at that as I'm looking at stocks. If I hit it, if I hover it, it opens and goes away. If I click it, it stays. Microsoft, last night I said, hey, I got a position in this. You can see I marked it up. Well, this thing was a great move today, and finally it moved. My stop is up here, and so I'll wait and see if it hits it tomorrow, and I'll probably take some profits. But how often do you buy a stock and get a move that is 20 some, or it's 11.222% on an expensive stock? So a nice move on Microsoft. OKLO, big move after hours, I don't chase. Or a big move today, and again, that's a topping tail. Why would I chase that? Lou, I actually gave that early on back in think in this range, and I bought some and I ran it up to here and I got out. And I should have got back in, but this thing was so volatile. Of course, without me, it went up very high. And then I talked about utility stock, CEG, Constellation Energy is one of those that's benefiting from data centers. That is what one aspect of how to do a top down. Now, another thing I might look at is, and what I probably like a little bit more, is to add to this. Let's start all over, drop down, put my pullback in uptrend, and then add price. And I want them above the 200. It gives me 68. Let's rank them by the number of positive impulses. Let's see what we got. Sony, it's a what's it called? Oh, I'm having a mental block. It's a foreign stock, so it's going to be very gappy, but it had a big move today. Here's that Sanima again, Sanmina, a contract manufacturer. It's a little late for my taste. Here's Microsoft, which still looks viable here. Here is Gorilla Glass. You know, this is pretty interesting looking, I think. I might look at maybe this. Here's one. I look at this guy here, and I might just start drawing trend lines on the chart. And that one's interesting. So do I have enough to push and come threaten here? Gorilla Glass looks interesting. Had good volume, breakout momentum. That might be something to look at. ASYS. It's had a big run already, high base breaking out. AMD, we looked at Zeta, looked at it over the weekend, and it's breaking out. So that's another thing that I like to do. And the other thing I'll show you when I look at the bottoms up approach. So from a top downs perspective, I think that we've got a couple of things that look interesting. I mean, this one, I don't think so. It's gapped too much, but I think Microsoft and Gorilla both look very interesting and interesting at a point right now. Now, if I go to out of the top down and I erase those and I'm going to go back to my impulse list, I could look at a bottoms up approach. And a bottoms up approach is I don't really care about the industry and sector, which is I do care by the way, but what I'd like to do is just stick a scan on it. How about my A plus scan? And the A plus scan found me a handful of stocks. Let's look at them. BZAI. Now, all of these are going to be stocks that are coming out of a squeeze. Think John Carter squeeze. Stocks in a squeeze are compressing the energy. When they come out, you don't know if they're going higher or lower, but when they go, they go. Since they're in a squeeze, they're probably sideways stocks building up energy. So this is a cheapie. I don't know anything about it. I am certainly not recommending Blaze. But I love the fact that I had a person buy yesterday, broke out today. Look at the 2 days with big blue dots. Relative strength is turning up, as is OBV. It's just a beaten down stock. All right. Cade, Cadence Bank, like this too. Sideways move, consolidation, and a breakout, probably in sympathy of the Fifth Third buyout of Comerica. And I went to my wife and I go, do you know why I have a thing in my heart for Comerica? She said, yeah, because they loaned you the money for med school, which they did. Humana was the Detroit hometown bank. Talked about it over the weekend. It's not a good looking chart, but it's a good looking story and it had a further move after a very significant move on on Friday. PRM was one of the ones I liked over the weekend. Perimeter Solutions, basic materials. I think it's a specialty pharmacy, high base but breaking out. And it's all of these have this yellow line squeeze and then have some constellation of those first two dots. SBCF, Seacoast Banking, Seacoast, yeah, I think it's Seacoast or is it Sea Space? I can't remember. I think it's Seacoast. We have them here. Pull back to the 50 and a breakout. Looks good. SLDP, Solid Power Inc. I'd have to do some research and see why it moves so much, and I could do that right here. Earnings are not to November 6th. It doesn't make money. It's got minimal revenue. That's important to know. And if we look at news, on the right path to market readiness, if I wanted to read that, I could just click on it or double click on it, as the case may be. And somewhere, not there, oh, I bet it's there. Okay, let me shut this down. And let's pull this down. Here is the Seeking Alpha story on solid power. Tell me why I should be interested in it. So we give you the news. It looks like a battery story. So I go through the list. SOPA, cheap stock, massive move. I have to figure out more about it. TALO as an energy play, breakout, pull back, and looks like it's running again. TBBK, nice move up, another regional bank breaking out. And then XPro, which I think is in the oil services. I can't remember. XPro. Yeah, I'm thinking oil services and break above the 200 sideways move and breaking out here, which I like. So that was one scan I launched this week. It's in everybody's product. You just drop it down and it already builds in price and volume. The other one was if I get rid of the A and let's look at the A plus, the A scan. And this is the two dots, but it requires a little bit of filtering. Let's very quickly ABV it. All right, this one I don't know anything about it. Obviously, it's a biotech. It probably had some good news. It looks like it's getting ready to break out here. It's breaking out. Do your history. AIoT, tech play, kind of low in the pattern. This is a good one right here. Um, this requires, am I still in daily charts? No. I thought this required two dots, but you're breaking out above a trend line. ASYS. Okay, this one does not require two. Another one breaking out. BANC of California. And you see, these are quality stocks that are basing and breaking out. Here's that BZAI again that I thought looked interesting. So a lot of overlap on these two scans. All right. And then here's another regional bank that we have down here. They just love that acquisition because I think that's the goal of a lot of regional banks to be acquired. So those are a couple of built-in scans to help you find leading stocks. And then I have my old standby, which I thought was in the A scan. I'll have to talk to Praveen. Let's go with $5 and 500,000 shares minimum. And let's go to 2 days Momo up and see how many we got. And we got a bunch. Um, these all make my best scan. Archer Daniel Midland, nice uptrend, pull back to the 50, breaking out, coming out of a squeeze with two momentum dots, breaking above the moving average on the relative strength, not extended. ASB is a regional bank. I think you're seeing the same pattern is that they were pulling back and they really got juiced by this acquisition. BZI, we've seen 3 times. Maybe I should look at it. Cade is another regional bank. FIGR as an IPO. FNB is another regional bank. They all got the same pattern. Humana, I already talked about that. I liked it. And notice every one of these has these two momentum dots. These have been my go-to trade. I'd rather buy above the 200 at KNX. Transport, so two transports in a row, maybe something good is happening there. ONB, another regional bank breaking out. Here's that PRM over and over again. I kind of like this pullback and a breakout. You could probably argue that you've got, let me try that again. Touch this. You probably had a breakout and a flag there. P10, Patterson Energy. Um, it's got the pattern. I'd rather buy above the 200. SBCF, we talked about that's one of the regional banks. SLDP, we Saw that before. Double dots, massive volume, probably worth taking a look. SOPA, don't know anything about it. Tallow, energy story breaking out. TBBK Regional Bank, WBI IPO, skip it. Werner, another trucking. So I got three trucking entities, and then Expro, the oil services, also breaking out. So, um, the markets have had a long run. They're showing divergences, but they're still in clear buy signals. They're not showing me candles that say we're going down tomorrow. Could happen. Probably won't, but could. I do think we're going to get a pullback, but as I've made abundantly clear over the last couple of weeks, I don't think it's going to be a big pullback, but we're overdue a pullback, 2-3% pullback. And I think we go higher into the end of the year. Something for everybody there. And then I did mention Shopify, so let me just show you the trade I took. And I ended up going with the synthetic call. And so I had set the trade up to buy a call in the money, kind of in the middle of that bar, sell two of them a little bit higher, and buy one up here as we had worked up last night. So that very cheap trade to get into. If it goes to the moon, I'll still make money on the trade. And I am in Shopify, and the reason we liked it was kind of thought it was a cup and a handle with a breakout, and it further broke out today. So I hope you guys have a great day in the markets. That was 41 minutes. I must have wasted 10 minutes talking too much and teaching. So that was then it meant I had 30 minutes to look at the markets, more um, internal analysis than 99% of the people on earth will do. I looked at ratio charts to see what sectors were leading. I looked at top down. I looked at bottoms up. I found you a bunch of stocks, and I'll see you tomorrow. Thanks, guys and ladies.